Welcome back to the channel. My name is Brad, and today we're streaming on two different channels. This is new for me and for you. So let's go ahead and introduce ourselves. So my name is Brad, Income Architect on YouTube. Go ahead and introduce yourself.
And I'm the coach. It's my first joint live stream with Brad. We met in New York, and this is our first actual joint live stream. So looking forward to it.
Awesome. Yeah, I mean, it's been a few months, and I'm really glad that you came aboard and, we got to know each other. We had a really good time in New York. Everybody there was very polite, and we actually, all got along more or less. Although I like the British guys the best.
Oh, yeah.
They were fun to hang out with.
Yeah.
Right. So anyway, YieldMax came out with that whole decision yesterday to go to weekly payers. And I know that you follow them as well as I do. And let's go ahead and bring up that announcement and get each other's opinion about this.
Yeah.
I look at this going, all right, group one really doesn't change a whole lot. I mean, I have Chippy and GPTY because I am more into the sectors. I'm not an Alti fan. Nothing wrong with Alti. We don't bash Alti, but I'm not an Alti fan. I believe in investing things that you would actually own, and some of those I might not own. Your feelings on group one?
Well, I've been told Alti is one of the greatest ETFs out there. I mean, personally, I have different feelings, but I have seen since it's gone weekly, it's stabilized. It's not moving nearly as much. My biggest concern, though, is the history of it, how it started at over $20 a share and it dropped down to $6. That's my biggest concern. But not everyone is equally concerned with history. So
that's right. And they did make the change. And I noticed that they have better underlyings right now. So not only did they make the change, the underlyings also changed because there are some higher volatility stocks out there that they're not bringing into the fund. So I think they're being a little more selective, personal opinion.
Yeah. Well, and some of the stocks that were in the underlying funds have like moonshotted this year. I think, didn't they have Rocket Labs? They had Carvana at one point. So I think they could be doing even better potentially.
Yeah. So that's another one that's here and there. Just, I prefer, the sectors,
right.
Chips in AI, right?
Mm-hmm.
I mean, they're literally they literally have the opportunity to write the same strategies on Chippy and GPTY. So I'm just picking the one that I like, the sectors and the stocks that are in those funds. So.
One of the commenters here says, I'm bullish on whatever Brad does.
Well, if they actually watched, I did one on silver and silver miners, and it's only been a month or two. It's up like 20-some%, and it's paying 18%. So you sit back and go, I like the diversity in my portfolio, and we'll talk about that as we go through, right?
Yeah. Question for you, though, since we were both at the YieldMax event, how do you feel about the higher dividend payouts versus more stable NAV? Do you think that it's better to have a lower dividend payout and more stable NAV, or, as in YieldMax's case, really high dividends?
Wow, you just really hit me up. So I am looking forward to their 25% payers.
Yeah, me too.
Okay, let's back up a little bit. When I look at NVIDIA, who has actually done very well over 2 years, you can't take it away from them, right? But I do believe NVIDIA's paying in that 60% range. Yeah. Just imagine what the NAV would have done if it only paid 25%.
Exactly. And the reason I asked that question, because I think weekly might help to solve this.
I don't think it will. Honestly, I don't think it will. Okay. Personal opinion, I don't think it will. Although, one thing that they said yesterday on X, because I went to Wolf Financial on X yesterday, They're also said that they're not going to pay, or they're not paying the rolling of the synthetics. That I was like, that's news to me, right?
Yeah, me too, actually. Yeah.
And if they stop doing that, yes, that will definitely help the NAV, right? You know, so are they going to do that at the same time? That's the question.
We'll have to ask them.
Yes, because that was brought up by Michael, the new guy that was out. Mike Co, because he brought up that, hey, it didn't matter. Yeah, the synthetic rolls and the, you know, we don't pay out of that. I'm like, wait a second. that's not how it was. They were paying out of it. Right. I mean, Rod does a really good job of tracking that.
Right.
We know you weren't making all those distributions from your options trading.
Oh,
right?
yeah.
So how did you pay out that without including what they call that jelly roll, right? So
yeah, I've even noticed too, when I tried to do much more basic than Rod, but dividend estimates, they were always much lower. It's like, how is this so high based on the implied volatility and the trades? How is this so much higher?
Yeah, so it'll be interesting if they stop that at the same. It's one of those, oh, we're going to weekly, and by the way, we're not going to do this, and then everybody will be saying, oh, it's because they went to weekly. Well, was it, or did they change something else in the distributions? I'm okay personally. I'm okay with both of it. I just think that targeting 25% on something like Tesla or Nvidia, right? That you could actually have NAV appreciation and still get decent distributions. That's just a personal opinion.
NAV appreciation. Right? That's a new one.
Wouldn't you wish that, hey, my shares got up to $100 and they actually took it down? You know, I mean, that's
by next year. If we hear NAV appreciation as much as we hear NAV erosion, we're in great shape.
We're in great shape, right? Yep. I mean, that's one of them. Now, one thing I'm going to bring up Redfish. Brad got his wish. YQQQ. So that is on the next page, right? So YQQQ moved to weekly. And the reason I like that is there are times that I've identified that probably we should be shorting the market instead of being long the market. My problem always was YQQQ paid monthly, and maybe I want to hold it for 2 to 3 weeks while I'm shorting the market. Well, I might not have gotten a distribution. So it really didn't help me. So I'm actually happy that went to going to weekly payers. And the same thing for dips. I'm a true believer in Nvidia. But if you would have bought dips or moved it a little bit to dips back in February, you would have done very well. Got out in early April. So having that as a weekly payer personally helps me. I really like that. You were not on the X, though. One thing that they brought up is over the next 3 weeks or thereabouts, you can't rely on the distribution yields because some of these have been piling up for 4 weeks. Some of them have been piling up for 2 weeks. Some have been piling up. So we're going to see distributions be all over the place.
Right. Was that the last X stream with what's his name? Yeah.
With Wolf Financial. That was yesterday. I went on there with Ambassador of Quan and some of the other guys, and got brought up to the stage, and that came up. That was very very interesting that they brought that up, that there's going to be some that are going to be extremely high and others will be extremely low. You got to let it work through the system. It's not like they're trying to cheat us out of distributions, just that they're not holding them as weekly now. And they also brought up on that they have been testing this in shadow trading,
Hmm.
so it's not going to affect their trading strategy. Like they couldn't roll to the next week. So that was been tested for the last month or so, from what
Oh,
I understood on X.
awesome.
So
Now, these are going to be paid, if I understand correctly, so every Friday going forward,
that's
right?
correct.
That's
All right.
awesome.
So
Yeah.
group one was, hey, they're going to declare on Tuesday, XDiv on Wednesday, pay on Thursday. And group two is declare on Wednesday, XDiv on Thursday, pay on Friday.
That's awesome.
Yeah. For those that are using it, yeah. And I just brought up my use case of YQQQ.
Right.
I went back and looked at the last 2 times that my indicators had hedged, and YQQQ did exactly what it was supposed to do.
Hmm.
All right. So, I'm just trying in retirement, I'm just trying to avoid, huge downturns in my account.
You know what would be
So
interesting? I'm sure you've told this a lot, but so your story about you retired within the last year or so, right?
I am now 14 months into retirement.
Nice. And it's because you were doing so well investing, right?
I did very well with Bitcoin.
Oh, that's right. That's awesome. Yeah.
So I did very well with Bitcoin. It was in my IRA. I had BITO,
Hmm.
and I just got tired of answering to somebody else every day and getting yelled at for stuff that I couldn't control.
Yeah. I'm about there myself.
All right. So yeah, it was very enjoyable to step back and say, hey, I can start a YouTube channel, because one thing that I kind of preach is you got to have something else to go do. Just don't retire and say, I'm going to do nothing.
Right. Well,
That's
and
no good.
another source of income too.
Yeah, it does help out. It does help out a lot. But
Hmm.
at the I was really just thinking that, hey, I was only going to have a couple hundred subscribers who would want to actually watch and hear what I had to say. But hey, it turned out that I did find a pretty good niche,
Yeah.
to talk about.
Yeah. And I forgot, do you trade options at all?
I have trade options. I don't share that on the channel, but I
Okay.
do share that on my group if I'm going to trade a couple options, right? Just because I just don't want to get out and say, hey, I'm selling options on Biddy today, right?
Right.
And that's because I do share my income portfolio with my group, but I
Hmm.
don't share my total portfolio with the group, because
Makes sense.
I do have a growth side also, that I'm just long spy in the queues, and just you know
Hmm.
I did make that announcement back. I remember when we had the last big downturn, and I told everybody I sold my growth. I got all kinds of slack, oh, you shouldn't do that, you should do this and do that. And I'm like, yeah, I avoided the whole downturn.
You did. Yeah.
Right. So I sit back and go, hey, next time I identify something like that, why don't I buy YQQQ? Right. And I don't need to sell all my income. I just need to sell a small portion and hedge a small portion. I read Jay's book and he talked about that. I'm like, that's an easy one to do and not endure all the downturn.
Yeah. That's a great one for sure.
All right. So,
Um, yeah, I ask about options because I'm looking at that as my way out of working actually the wheel strategy this year, and I do share trades and stuff in Discord because
yeah. Yeah.
it's gone really well. That's like my main source of income right now, actually.
So, do you do puts or do you just do calls?
I sell puts for premium, and
Mm-hmm.
I'm bullish. So as the funds go up, a lot of them are the Granite Shares ETFs. So as they go up, I just realize the premium and just keep on going higher, basically, and it works so far.
Exactly. I mean,
Yeah.
there's so many different ways, and I've told this to people. There's so many different ways that you can generate income and generate wealth. And I can understand at first, I was like, oh, why would younger people want to be doing this? Right. But, now that I got to meet some of them, I can understand that. Hey, this could be paying for your car payment or your rent or something else. And that was something that really comes to light, that, some of this stuff could really do well for a young person to say, hey, I put $50,000 together and, it pays my grocery bill just by having it in some fund. $50,000 together. Ooh,
right.
Hey, that was you. So, hey, let's go through some of the comments. All right.
Yeah.
John is in my group, and no, let's go ahead and let's stop thinking that it's going to eliminate nav erosion. Right. We'll see. Maybe it does. Right. Right. Misty and Alti. How do you feel about Misty?
It's dropped a lot, but that's again because of the underlying dropping. Like Jay always says, the biggest way to eliminate nav erosion is to have an underlying that's going up.
That's going up.
Yeah. I'm very bullish on MSTR. So if that happens, I think MSTY will stabilize, but it's certainly down from where it was when it started. So
that's correct.
They bought in at the highs. It's lower. So
yeah, and I personally like the rec shares and the double I's. Right?
Those are good.
I'm waiting for the next series of those to come out. Not that I'm, again, I have Chippy and GPTY, and I also have Soxy. I didn't know people look at Soxy, because when we talk about YieldMax and you talk about nav erosion, Soxy's nav has appreciated more than the S&P 500.
Wow. I've seen that even with some of the Roundhill funds too.
Yeah. So when they talk about, nav erosion, well, Soxy is actual nav is better than the S&P 500. And then they pay you 12% on top. So you can just imagine how that goes, right?
Now, is that like a total return standpoint?
Oh, no, that was not, it's doing better than SPY price return.
Mm-hmm.
Then you add total returns on top of it. So that was really impressive that they actually have. And Biggie is not doing that bad either.
Right. I'm actually up in Biggie. Yeah.
That's why I believe that when they go to 25% payers on some of these underlyings, and we can compare them to others that they already have, we might be able to say, because personally, I don't think, well, we'll get to that comment in a second. I live on 8% is my rule. So if I got $1 million out there, I want $80,000 a year in income.
Yeah.
Right. I think what people get into is, hey, it's paying me 60%. I can live on 50%.
And they think that the 50% is going to be on like that same million. They don't realize that there might be some nav erosion. They could have 900,000 the next year, then 800,000.
That's right. Yeah. They're not thinking about that. And I think that is why a lot of people have a bad taste in their mouth, because people that actually just have been accumulating and not using it, right? Either paying off leverage or whatever they're using it for, or paying, for a car or something like that. They're trying to take too much of it. And, I've talked to Jay and others, and my 8% is probably fairly safe, if not conservative. I think I can even use 10 on most cases.
Yeah, I think it is actually conservative. Now, what are your thoughts, off topic again, but Fidelity, like I've been talking about in my option strategy, they actually pay income from your cash that's tied up in, like, if in my case, selling puts. So the cash that's tied up in collateral, they're paying 4% on either the SPACs or the FDRXX.
That's correct. Yeah. So you're selling calls and you're getting 4%, or selling puts, right? Cash secure puts, or cash secure calls. You're still collecting that 4%.
Yeah.
From Fidelity, at least. And that's who I actually use. I use Fidelity.
I moved everything there because of that, actually.
Yeah.
Yep.
about NAV erosion, stop increasing outstanding shares quantity and all. We lose off. I don't get that one.
He's saying
NAV erosion has nothing to do with the amount of shares and quantity.
that sounds like he's talking about a reverse split or a split or something. Yeah, two different things. Yeah.
Two different things. Yeah. When they do creation units, and I actually got this on the book and had that explained. When they do creation units and add additional shares, that does not dilute your share count or your actual share price. Right. That's creating more shares. And what happens is when they create another 10,000 shares, the actual NAV increases proportionally. And that's why you have an extra 10,000 shares for those middle brokers to be able to distribute out. So I think there's still a lot of misunderstanding how ETF, and that's an ETF altogether. It doesn't matter who it is. SPY is the exact same way. So it doesn't matter who it is. Which channel do we chat on?
It's on both.
That I don't know. Okay, good. Yeah, I thought so.
He's one of my followers, so he found it on mine. But yeah, it's on both. So
yeah, it's on both. Great.
Yeah.
Great. Yeah, that's a good question. I've never first time we're streaming together, right?
Yeah.
It's very important to us, right? Oh, yeah, I'm sure NAV is important to us, right?
Right. Well, what was I going to say? Oh, so like we were getting to like with Roundhill, they were outpacing a lot of the YieldMax funds until YieldMax started going weekly. And now they're a lot closer in terms of total return. Some of them are actually beating the S&P.
Yeah. And some of the Roundhill, they came up with this new Roundhill leveraged WPay, weekly pay, right? I think that's an interesting fund, but I keep on saying that is a directional bet. You're betting that it's directionally going up and to the right, and better not have a correction because you won't like what happens, right?
True. What are your thoughts, by the way? They talked about, was it LevMax? That should be coming, I think, soon. They were talking about it in New York. It's going to be like a capped upside, and then like it's somehow 3x, but like they cap the downside. They cap the upside at 3x, and they roll it every month or something.
That we're going to just have to see how that works.
Yeah.
Or are they able to do it? I saw your video on that where they talk. It's going to have 3 times the upside and 1 times the downside.
Yeah. And somehow they reset it every month.
Yeah. Is that really going to work?
Right.
Because it'd be nice. Hey, I can buy NVIDIA and watch it go up 3x and then only cap myself going down 1. That would be a great fund to hold, but is it really going to do that?
You have to keep a close eye because in 30 days, if it rolls, then you have to make sure you're either out of it or you're managing your position properly.
Yeah, that's right. That's right. And that also gets into these buffer funds or boomer candy that's out there that, even like a SPY H from Neos, their downside protection starts on the day that it rolls, right? And they roll on the first of the month. If you're buying it mid-month and the market is up 2 or 3%, well, your protection didn't shift up. It's still down a lot farther than what people might think. So that's something for them to think about, right?
Yeah.
So Redfish.
What we got in New York.
Yeah, remember I still have that.
I think they copied, I used to do this on my channel, so I have them both here. The 8-ball, the advanced equipment, I call it. But it just came up, when you shake it, it comes up with a fund like PLTY.
Yeah, that's right.
It just came up. Yeah, that's paying a really good dividend.
Yeah, so Redfish brings up GDXY. Gold down today. Yes, gold is down today. Gold just hit 4,000. And I got into the new Curve fund on gold.
Is great. Yes, we were just talking about that with Howard on my channel.
Yes, in the way that they're creating a Delta 1. And that was a very interesting one, right? That they're creating that Delta 1 position, right? So that's something new that hasn't been around before, that they're doing straddles and they're creating that Delta 1 position.
Right.
So gold is definitely something that we should have gotten in. I got in, right? I got into gold and silver. I did a silver video about 3 months ago.
How long have you been in both?
So I bought silver. I bought his silver the day it came out.
Okay.
Because I actually had him on the channel. It came out on the day that it came out, and I bought his gold fund on the day that it came out.
Mm-hmm.
So I also hold the Neos gold fund. I know the Neos gold fund will not have the same amount of upside, but it's got a lot more downside protection, less worry, because he's buying those calls without the puts to give him the Delta 1. Great going up, but not so great going down. That's the
right.
Because he's gotten a beta of 1, where Neos has a beta of about a 0.7. Right, so that's why I hold both of them.
Mm-hmm. Well, and so we've talked about, they call it relative beta, like another term for NAV erosion.
Mm-hmm.
Yeah,
that's right. So let's go through I bought BITK. That one has the Ethereum, correct? Is that?
I think so. Let's see how that one's going. BITK, EFT or ETF Opportunities Trust Tuttle. Ask him when he bought.
I don't know. Hey, when did you buy there?
It's September 22nd. It's slightly up.
Okay.
Yep.
Oh, is that the new Bitcoin one that's paying 300%?
300%.
I told her. Yeah, from total. Yeah, it's paying 300%, right? Hey, of course you're bullish or whatever I buy, right? I'm not really bullish. So I bought gold and silver, and that's gold, silver, and Bitcoin is 15% of my portfolio.
Mm-hmm.
Right. So
that's good. Yeah.
It days that gold is doing good, you get Bitcoin that's not doing so good. And then you got days that Bitcoin does good. And so I look at that going, that's a fairly conservative method of not only just owning equities. And that's, a lot of people just own a lot of equities, which is tough, right?
Right. Well, and I've said, coming from a person that, used to be, that's me, I used to be strictly a growth investor. I did fine in stocks, but it's just never going to get you there fast. It'll get you there over like a lifetime, but that's where I found options and dividends. That's where it's at, in my opinion. Yep.
Metals are going crazy. Yes, they are. Mm-hmm. Next one, SLJY, 18% payer. I did my video on that one. I own it. I also own the underlying, which is I forget now. I can't remember.
SILJ, right?
Yes, that's correct.
Yeah.
SILJ.
Mm-hmm.
And that, for me, that's up like 23%. Right. So it is crazy how well those are doing, right?
Mm-hmm.
I bought it because it's now weekly. Yeah.
People love the weekly.
YieldMax, not NavMax.
That is true. That is true, isn't it?
Wow, that is something that we should make a T-shirt for.
I'm surprised Jay hasn't said that yet. That seems like a Jay slogan.
Yeah, that's funny.
Yeah.
Right.
By the way, something else interesting. He doesn't really do interviews as much anymore, right?
Well, when I was talking to him in New York, there was definitely a conversation that he needed to step back and actually be more involved in day-to-day. So I can understand that. I mean, they actually hired somebody to do that for them now. So
yeah, that's exactly what I thought was happening too. They have him more focused on the trading now, and then Mike is now the PR guy.
Yep. Yeah, so weekly allows you to monitor the distributions better and allows you to react faster to trends. That I am going to say fully agree. Fully agree. Right? That is something My chippy is NavMax. Yeah, could be. Chippy has done well for me. And Amy's here. Hey, Amy, how are you doing? Right?
Welcome.
Yep. Health and wealth, right? You know, his wife walks way too fast. We'll just throw that up for conversation.
Yeah.
They almost lost me in New York when we were walking to the exchange, right?
Oh yeah.
Yeah. I'm a big fan of NAV appreciation, right? Yeah. Yeah, I'm a big fan of NAV appreciation too, right? I mean,
me too.
I invest a lot more into like QQQI from Neos and some of the Neos funds. And even my NAV is up almost 8% in Neos on the Qs, right? So not only do I get their 14% distribution, but I only live on 8, but at the same time, my NAV is appreciated, almost 8%. So that's
good. It's
more
your,
my style of investing.
8%
right?
NAV appreciation pays for your yearly expenses, right? Yeah.
That's right. Yeah. I mean, it really helps out. Right.
Yep.
Hallmark declared new holiday NAV appreciation today. Oh gosh, gotta love them.
He said 2025. That was in the past. Maybe next year.
Yeah. Well, yeah.
Yeah.
January. Let's see here. I started buying YieldMax December 2024. Ouch. Right. Didn't get any dividends in my pocket. Every dividend I reinvested back. Oh, yeah, nice. And lost a lot of cash. Oh, I can understand that. You went through April and there was that downturn.
Oh yeah, the Liberation Day or whatever.
Liberation Day. If you would have bought YQQQ starting in February, you would not have that problem. But you got to be able to rotate in and out, right? Yeah. And that's another one. You can always put distributions into other funds. I thought about that. I thought about that with the weekly pay from Roundhill and saying, okay, I buy, 200 or 300 shares of this and it weekly pays me and I can feed them back in, because one thing I'm not doing is I'm not reinvesting above 3.5% my cost basis. So it literally has to fall to 3.5% below my cost basis for me to reinvest. But I'm a different point of my life than a lot of people.
Right.
I have my money set to generate me my income that I need to live on. I'm trying to survive, not trying to grow. But I love growth at the same time. Don't get me wrong.
Oh yeah, me too. Growth. I love growth too. Yep.
Thoughts on Misty's decline? It all has to do with the underlying, and the volatility's been down. Right.
His question: will it accelerate NAV erosion? No, I think the opposite. I think it might slow it down. Yeah,
and the MNAV keeps on dropping too. Right. That's another one that's out there. Right. MNAV keeps on dropping. Right. This is a great interview. Hey, appreciate you guys.
Yeah.
Right. I'm not a real person. We need real changes to save our money and time is. Oh, you know what? Hey, I'm a real person too.
I've been told picky. I was.
Yeah. You got to be picky. I mean, you should never come out and listen to both of us and take everything we say as gospel. You should go out and do your own due diligence.
Right.
You should.
Well, I'd say it's for entertainment purposes only. I mean, I show what I actually do, but I'm not saying that anybody else should do it. Yeah. If they do, it's their choice. Yeah.
And that's why I don't always show, like I every month I show what I have in my portfolio, but I don't show percentages or anything else because I don't really want people copying me.
Yeah.
Right. In my community and circle, I share everything. Right. A little more tight group, but out in the public, you guys don't need to be following my day-to-day transactions and moves, because that could really get you in trouble. Right. So I sit back and go,
Right. Circle's fairly easy to get going. You were saying, like, that's just your separate like group,
Yeah,
right? Yeah.
that's right. I run a circle community. Some of these people are in my circle community, and it's great because it's a closed group. You know, I do charge for it, but I think I bring a lot of value. I do daily signals for everybody. Right? I created a whole platform that, hey, we know when we need to put a hedge. When I actually have put out, I'm going to sell this much and buy YQQQ when this happens.
Right.
People can follow me. They can not follow me. They can, and I told them they need to make their own plan because every time that I back tested it, every time that it's signaled, except 2 times in the last 10 years, the market has gone down.
Oh, wow.
Only 2 times did the market go up 1%, both times. Only 1% before we got the signal to go back to risk on. So you sit back going, YQQQ would not have devastated us during that time period.
Mm-hmm.
But I look at it going, I mean, I predicted Liberation Day, or that signal had Liberation Day, and it did it in February. It told us that we should start shorting in February. So well before April. And then the whole Japan carry trade, it had us switch over 2 weeks before the Japan carry trade.
Really? And what signal is this again?
I'll share that it's based on candlesticks.
Oh yeah.
Beyond that, I had to go do sensitivity and everything else. There's a service out there called Victor Vest, and I went out to their platform and I looked at their calls, and I said, okay, how are they making them? And I was able to duplicate them within a couple of days of all their calls, and they've been doing it for 30 plus years. I'm actually probably a day before they do it. So I'm a little bit quicker on my sensitivity than they are. But hey,
that's awesome.
Yeah, there are paid services out there that does this, and they've got 30 years. And again, it's not financial advice. I'm just saying that, hey, this indicator says that the market direction is changing. How far it goes down, neither one of us could tell you. Right?
Exactly.
I mean, we can't tell you what's going to happen, but it's signaling that the direction of the market is changing.
Yep, for sure.
All right. It says all my YieldMax of double digits returns. Yeah. Somebody showed that on Circle. There's only, I don't know, there's only a few of those funds that were actually red since the beginning. Right?
Oh, probably
so
YRK.
Yeah, I'd have to go pull up the list, but if you would have reinvested total returns, and again, it all has, like you brought up, Misty depended on the day that you bought Misty.
Yep.
You bought Misty on day 1, you did well. You bought Misty when it was at $40, well, you might not have done so well.
Right. Very true.
Goes up and down with the changes. We will know. Don't want to lose investors. Yeah, I mean, and that's why.
Yeah, I mean, we might disagree a little bit. I think it'll be a little more stable with the weekly.
Yeah. It definitely will be more stable, but it's not going to appreciate.
Right? That's true. Yeah.
Right, let's face it. It's not anybody that says, "Hey, YieldMax is going to appreciate the NAV." They not the standard funds. Like I said, the 25% payers that they're proposing to come out with, I think they have an opportunity. The 12% payers, they definitely, time has shown us that they definitely have. So, those are 2 different animals, right?
Mm-hmm.
Now I understand why I preferred. Yeah, that's right. Because I want to be able to get into it, maybe be into it for 3 weeks. Maybe I'm going to be into it for 6 months. I don't know. And that became into, if I wanted to protect my account and I wanted to sell or buy puts, I was actually going to buy puts when this indicator went off. and how far out do I want to buy those puts, right? And the indicators, sometimes it swapped back in 3 days. Sometimes it took 6 months.
Right.
So once you're dating, so it's, hey, it's just easier for me to go to YQQQ with a portion of my portfolio just to give me that buffer to the downside. And if you, and I really encourage people, go look at YQQQ and something like QQQI on a total returns chart over the last 6 months, and you will literally see it did the inverse of each other.
True. Yeah, true.
And you can look at price. So price on YQQQ actually went up during that time. So if you would have went in, price went down on QQQI, price stayed steady, so your actual capital didn't erode on you, right? Health and wealth. I need more capital option.
I agree with this. That's a good idea. Use more. Use some of your income to fund a wheel strategy. That's a good idea.
That's right. And I was wheeling silver.
Yeah.
When I called silver, because there was a silver fund, but it was an ETN. And if anybody's been watching my channel long enough, they know that I do not do ETNs. Just don't do them. And JEPQ, it doesn't matter what the ETN is. I really try to stay away from them. I have bought one every now and then, but that's more of a risk bet than anything else.
Now, why is that with the ETNs? Oh, that's fun.
Because you can't see what they're doing.
Oh, yeah.
Right?
Oh, right. I have heard that.
You can't see the options trading, right? And that's why I don't do a whole lot of closed-end funds either. You can't see what they're doing. Not that they're doing anything wrong.
Right.
I'm just saying that
nothing nefarious.
I want to be able to see what they're doing.
Yep.
I think that's reasonable expectation to see the transparency of seeing what you're doing.
I agree.
Right?
Yep.
So it's usually people my age looking for this type of income. Well, I can understand that. Hey, that's true. It's true. But at the same time, I can understand why younger people are looking at it. Right? I mean, Brick by Brick that was in with New York with us, when he told me what he was doing and why he was doing it, it made understanding.
Right.
I'd love to get your guys' opinion on Roundhill W strategy versus YieldMax peers. I think the W pay is a directional bet. Without a doubt. If it's going north, right? And by the way, you're in my community, so I'll tell you when it's risk off, right? So you could sell it, right? But if it's risk on, I think it's a good strategy. I really do. I think that 1.2, and that's why I like the loss for words, and that's not really good for Brad. That's like why I like the Rex shares. I think that 1.25, 1.2 leverage is something I actually like. I mean, Neos is going to come out with 1.5 leveraged SPY-I and QQQI. They're going to call them boosted funds, but their betas are about a 0.7. So that's really tells me it's going to be on the upside. They'll still have NAV appreciation even if they go through both of their strikes.
Similar to Granite shares with the yield boost.
That's right.
Right. Yeah.
So.
Mm-hmm.
So the answer is yes. They do a good job with ROC, but neither one of us works for a fund, and there is no way for either one of us to be able to tell you how much ROC will it be. Can't tell you.
Unless they've said so, which Curve Funds already has, because their fiscal year ended in June. So they said 99% ROC.
Mm-hmm. They're talking about the new Neos fund. It's going to be on master limited partnerships. We just don't know. And they can't even talk about it because the prospectus hasn't even gotten approved yet. So it's once the prospectus is approved, then they can talk to us.
True.
Right. And I don't think people understand that. None of us actually get paid by any of these ETFs.
Right.
I mean,
exactly.
The best thing that we get out of these guys is they'll buy us a dinner after we paid to get there.
Exactly.
And we spent our own money to get there. They'll buy us a dinner. All right. So I don't think that they're paying us or we have any inside track.
Exactly right.
We really don't. Right.
Yep.
I think IBKR. Yeah, I think I'll have to go look at that one. Probably right.
Interactive brokers.
Yeah. Interactive brokers.
Yeah.
Right?
They do. Some of them, like somebody was telling me, Robinhood does the same. I'm sure there's other brokers that do, but I know for sure Schwab doesn't. So.
No, and I was never a Schwab person. Right.
Me neither. I was there by default because of Ameritrade when they did the whole transfer, but I'm glad to be out of there. Yeah.
Yeah, and see, mine's always been with Fidelity because I worked for a big corporation, and that's where they had their 401ks. So when I rolled my 401k, I literally just rolled it into Fidelity and never left.
That's actually very similar. I got with E-Trade originally because we only had so many brokers that were approved. So E-Trade was one, then Ameritrade at my next company, and then Schwab, and now Fidelity.
Now, do you use a lot of leverage?
Oh, I do. Pretty much my whole wheel strategy. It's very risky. I get that, but it's on leveraged ETFs, like a lot of the Granite shares 2X.
So you're not using leverage. That's fine. I'm not saying anything about that. You're not using leverage to buy or sell.
Oh, not margin. No, like I see some of the
using margin.
There are some, not to compare channels or anything. Like some people know what they're doing; they're really good at it. But some channels are like, joke about home equity loans and margining out the entire account. No, it's my money that I'm using.
Yeah.
Yeah.
So I've looked at Fidelity margin, and it's a little pricey actually. I was shocked at how pricey these were, and I looked at Robinhood on their margin. Mm-hmm. Not that I'm suggesting anybody goes use margin, but I really thought about something like NVII and put money in and just use a little bit of leverage to grab some more shares, and I can understand that, but just don't go crazy doing it because I don't need to. That's the best part. That's
right. I agree with strategically timing it.
Yeah.
But not all the time.
Distributions almost always outpace. Yeah. I mean, you can go look on a total return chart. I mean, I use for mine, I use either Seeking Alpha or stockanalysis.com. And a lot of people on Twitter use stockanalysis.com for their total returns. I think they do fine.
This comment I don't necessarily agree with. Some of them, like Tesla, if that were true, then Tesla would be positive right now, I would think.
It's not. Is it not true?
Situationally true, maybe. I mean, like with the newer ones, maybe, but like Tesla, OARK, some of those.
Tesla's up at 54%. Max. 1 year, it's at 55%. 6 months, it's up. 6 months, Tesla's up at 74%. Come on, total returns. What are you guys complaining about?
No, I get it. I'm just saying, like, I've been in it since.
But it's all about timing.
I've been in it for 2 years, right? Yeah.
Yeah.
Yep.
It's all about that timing thing, and that's where people got in at the wrong time and they didn't do it. And that's so. There's a new Ether fund that came out today. One of them is paying. It's on Amplified. They wrote the calls on 50% of their underlying. 50% is uncapped. It's written 11% out of the money.
Oh wow!
And they're going to pay 36%, 3% per month. And I said, I'm just not a buyer of ETH above $3,800.
Right.
I can wait. You know, next crypto winter, or when, if it ever gets below $3,800 again, maybe I'll buy some then, right? Because 36% is a pretty good, but that goes back to timing. And I clearly on my channel, people watch. I told you not to buy Bitcoin above 110. I'm just taking profits now. Just I did a little bit.
Wait for a pullback, if anything. I have a little bit of Bitcoin in Coinbase.
Well, I got Biddy and I got BTCI. You know, they pay 24, 28%. And I really like those high distributions, but I'm not willing to buy more Biddy and BTCI at $120,000. I can wait. I got and maybe that's because of my age, but that's where I got in.
Mm-hmm.
Right? Exactly, Brad. You only need enough to live on and manage your healthcare costs, taxes, and ROC. Yeah, it all. But and I said something about that the other day on X. For those that are actually trying to step away early, ROC, and let's say you're going to use a brokerage account. ROC does not count for the Affordable Care Act. So you can make $1 million in ROC, and the Affordable Care Act it starts to take away being free after about 70
of income.
$1 million in orders. Yeah, if you make over $70,000 in income, it's no longer free. It's no longer subsidized. It goes down, and once you get but RSC does not count.
Oh, interesting. So if you get your income under 70,000, but you make $1 million investing, you can still qualify for.
If it's ROC.
Oh, okay.
Right? Yeah, because that's return of capital. That's not ordinary income.
Right.
So ordinary income and long-term capital gains, that falls into income.
Okay.
Right. But return of capital does not.
Okay.
It's returning of your capital. So that makes it huge for those trying to step away early like I did, right? I mean, I'm not using that because I had enough from my retirement accounts that I didn't have to worry about all that. So
so you just pay health care out of pocket?
So I get my health care right now is free because I'm a veteran.
Oh, okay.
Right?
Awesome.
Yeah, because of my service and everything that happened, I get free health care. But my wife, I'm paying for hers.
Okay.
Right. So
yeah.
She has health care. And not having health care in early retirement can devastate you.
Right.
You don't want to risk your retirement, especially I worked so hard to get here. I don't want to risk it.
You don't want to just blow it. Right. Exactly.
Right. So let's keep on going. Excellent part. You need it. Yep, that's right. And SMC. Oh yeah, that's the bad one. All right. You guys like blocks. I own blocks. Right. David Nichols has been on the channel. Right. Blocks is doing very well, and that's probably my only play that I've done was with blocks, because part of that is ETH, and it has done very well. Right. 36% payer. And they're doing put spreads on the stocks and call spreads on Bitcoin and ETH. That was the way that they were playing it, right?
Right.
Yeah. We'll just take that one down. Yes, you're probably correct, right? With some of these ETFs, right? Especially if they're leveraged, right? I mean, I read the book, The Secrets of TQQQ. Yeah, and that's where I get into Alti writing on TQQQ.
Yep.
The answers, I don't think people realize that's a 3x leveraged fund. It doesn't take much going down for the NAV to go down. So
is that a book?
I'm waiting for now. Yeah, there's the secrets of QQQ and TQQQ, and it was written by a trader from JP Morgan, I do believe he was at. And he showed how you could outpace the market with TQQQ, but you had to sell on certain indicators. And that's where I started to build up my own indicators to say, hey, we can get out of the market here and short the market and do better. Right. And he gave some basic understanding how to do that. I didn't know if Roundhill was coming out with silver funds, but they are definitely coming out with a gold fund and a gold miners fund. That is 100% true. And there you go. If you really want to get into it and sell puts and calls, you should be buying and selling puts and calls on Nugget. Right?
Mm-hmm.
Bring up Nugget. Right? What's Nugget? Nugget. All right. 1 month, it's up 40%.
Yeah. Is that NGT? Which one?
NUGT.
Oh, NUGT.
Right? NUGT. Year to date, it's only up 371%. Only. Right? Yeah, but it is a leveraged fund. It's out there.
Yeah.
Blocks has performed well. Can't take that away.
Mm-hmm.
Either have interest in BTGD. I talked to the fund manager yesterday. He's coming out with new income funds based on BTGD and about 6 other ones. Am I interested in BTGD by itself? Personally, no, because that would be more the growth side, and I'm more on the income side. But I'm really interested in the BTGD income fund. It should be out by Christmas.
Interesting. They were giving out hats in New York.
Yes.
Yeah. That's where I saw it.
So yeah, and I went out to pizza with him.
Oh.
He didn't even buy me pizza.
Oh, see, if they didn't buy me pizza, I would never buy their fund.
Yeah, there you go, right? Yeah, no, he didn't even buy me pizza that day. But I talked to him yesterday because the prospectus was finally launched. Okay. So I don't know a whole lot about it. I just know that he said it'll get approved around Christmas time, and then he's going to come on the channel and talk to us about it.
Great.
All right. One thing I will throw out to you, I'll go ahead and throw this out because you can go read the prospectus yourself. Yeah. It's on the title platform, but Jay is not doing the calls.
Oh, okay.
They went to a third party to actually write the calls.
Interesting.
Away from title. Let's put something else out. Chat, which is a Roundhill fund, is on the title platform.
Oh, okay.
So you sit back and go, these guys are all like kissing cousins, okay? Don't think that they're not.
All right? Intermingled, interrelated. Yep.
Interrelated, come on. I mean, Michael, that was with us at the YieldMax event, now works for Vista Shares.
Oh, interesting.
That was announced a couple days ago. I bet. Yeah. I'm still loading up on Alti. Hey, everybody has a plan. Just as long as you have a plan, go for it. That was my biggest thing, right? Asset prices going 25% bigger, the payday at higher prices. Asset prices going higher at 25% bigger.
I mean, I agree with that. The higher the price, the bigger the payday. I would agree.
Yeah. Exactly. I mean, I own T-Spy, is my 0 DTE fund. He just made the largest distribution because his NAV is the highest it's ever been. Wow. So as the NAV continues to go up with him, their distributions continue to go up, right? Awesome. And he's paying 14%, but 14% of $26 is more than 14% of $20.
True.
Right?
Yeah, very true. Yeah, yeah.
Last week, I must admit, don't get it.
Oh, he's talking about the one paying 3%. Or I'm 300%.
300, brand new 287. Yeah, yeah.
Right.
I'm actually meeting him. Matthew Tuttle. I'm meeting Tuttle Capital in Chicago next week.
Cool. Wow.
All right. So I'm going to go to the CBOE bell ringing, and Mike and Matthew Tuttle will be there.
That's great. Have you been to the CBOE, or was that your first time?
No, first time.
Nice.
First time CBOE, and who would have thought 1 year after retirement that I would have gone to the NASDAQ bell ringing and the Chicago bell ring.
Yeah.
That was never in my plans of retirement.
True. That's awesome. Right. Yeah.
What does Clinton have to say? He's in my group. Any special considerations when buying Curve TSLP? I need to reinvest my distributions. I want to know what you. So I've always done a discounted free cash flow. I know that sounds old school, but if you don't do a discounted free cash flow, are you overpaying? I think Tesla's going to go up over the next 5 years. I just think that they are. All right. I think Tesla's a good company, but they're going to go up and they're going to go down. I mean, Bitcoin's going to go up and Bitcoin's going to go down.
Yep.
So buying in is probably more important at the right price to keep your NAV going up. And Curve has done really good with their funds anyway. So, PMCC, yeah. Yeah, I mean, you can get in a bunch of them. PMCC, PM.
Oh, poor man's covered call.
Yeah.
So basically buying a leap and then selling a covered call against it.
Yeah. And that's, you can get into all kinds of stuff, right? I mean, do you think that I want to, well, I'm making YouTube videos all day. Do you think I really have time to go out and do leaps and everything else? Thanks for the heads up on SCHG. And I want to say this. There's going to be a new YieldMax fund on SCHD, double the dividends. So that makes it an 8% payer.
That's awesome. And SCHD is a very popular one.
Yeah, so it's going to be double dividends. That I can see actually doing fairly well, right? I mean, that's a SCHD. Everybody likes it for some reason. I don't. I did a whole video on it and just said, why? I mean,
really?
Why? Well, it's just something out there. Coach, I watch your channel.
Thank you.
I see you on. Yeah.
Yeah.
Dudes. Hey, Jonathan.
Yeah.
Ambassador Quan, right?
Well,
he was with us in.
He was, yeah.
Right. Is weekly competitive better than monthly? I've done the math, and my answer is it's not enough. Okay, I'm not going to live long enough for it to matter. Personally, if you were in your 20s, it might make a difference, right? But I don't. Being older, I just don't think we're going to get there. All right, doing good. Well. How soon before we get daily? Well, there's that new one.
There's bi-weekly.
Yeah, right? Bi-weekly.
Yeah.
And I know that Max Convexity likes it.
Yep.
I didn't buy it, but Max likes it. But he does things differently. I agree with Max. He wants a small percentage in income and everything else in growth. So if he could have
strategy
5%, if I can have 5% of my total assets in income and 95% in growth, that's what he's trying to achieve. He's trying to achieve as little in income as he can. And I'm more of, I don't know why, I'm more of conservative. So I spread them out and I buy the gold, I buy some Bitcoin, I buy some business development companies.
Yeah.
You know, I do a whole slew of things. I just don't have any bonds. Just
Yeah, I
have
don't do
bonds.
bonds either. Yeah, no bonds.
Yeah.
Yep.
So no, I think YieldMax had some questions and problems trying to go to weekly anyway. All
They
right.
did.
So it wasn't like they wanted to test this out before, especially making the change. I think it's easier to start it in the beginning that way than change it later.
Mm-hmm. Let's see. How long do you want to keep going? You're welcome to keep going, but I do have to drop soon.
Okay.
Yeah.
Well, we got a lot of comments. I'm going
Yeah.
to say, any comments that stand out to you guys? Stand out to
Let's
you?
see. Yeah.
Bring them up. We can calm down.
Let's do this one, and then the one at the end there.
Okay.
Yeah.
This one.
Yep. Mm-hmm.
Hey, Brandon Scott H. I brought some ETTTY. Yeah, we'll see how it happens. Thoughts compared to the other funds of Ether. So the one that there's two of them. One's going to be a really high yield, 70, 80%, and one's going to be 36%. I prefer the 36% payer because they don't rate on 100% of the underlying, which means NAV appreciation, right? The other one rates on 100%, 11% out of the money. So you're going to have problems there if it goes through the strikes, actually having NAV appreciation.
Yeah, very true.
My thoughts. I tend to like funds that don't rate on 100% of the underlyings. I don't know what your thoughts are on that. I wish YieldMax didn't rate on 100% of the underlyings all the time on everything.
Yeah, if they could have some more legs in the position, I think that would be a good thing for sure.
Yeah, and I really think that these 25% payers can get us there.
Yeah.
That they don't have to rate on 100% of the underlying to get us 25% on an NVIDIA. So.
True.
Hey, it's been great having you on. Any closing thoughts? I know you're up against the time.
Yeah, no, it's been great coming on. Great dividend investing. I'm really excited for the future of this space. They're really, like I always say, all these fund managers are putting their heads together, figuring out the best solution, and I think we're going to get there for sure. Yep.
And I think we started with JEPI and JEPQ, right? That was the starting point.
Yep.
I think we're probably on revision 4 now of income funds. I mean, we've gone from those funds to QYLD and went through the QYLD funds. I think we're really coming out on the other side with better funds for the investor. So it's a very exciting time to be in the space.
Absolutely. Yeah. All right. Thanks again, Brad. Check out both of our channels, Income Architect and then Live Off Dividends and Options Now. Smash the like button, subscribe to us, and we'll see you all next. Yep.
All right.
All right.
Take care, guys.
Yeah. All right, you too. Bye.